All right, welcome back. My guest today is Ryan Smith. Ryan is a former banker, entrepreneur, and founder of I-1031, the intelligent exchange platform. After more than 20 years in banking, commercial real estate as a licensed real estate broker, and financial services, Ryan built I-1031 to modernize the 1031 exchange industry. The first to market end-to-end service as a software platform gives exchangers and their advisors a fully digital way to start, manage, track, and complete a 1031 exchange from beginning to end. Ryan is also the host of the My SBA Loan Pro podcast, where he focuses on SBA financing, deal structure, and helping business owners navigate the lending process. This podcast is for educational and informational purposes only. It does not constitute legal, tax, financial investment, or lending advice. Always consult your own qualified legal, tax, financial, and lending professionals before making decisions or structuring a transaction. Ryan, welcome to the podcast.
Hey, thanks so much for having me, Doug. I really appreciate it.
It's an honor to have you. We've been good friends for a long time, and I highly respect your depth of knowledge, especially around the SBA platforms, and now as you're moving into the 1031 exchange strategies as well. So Ryan, let's start with a basic scenario. Let's say an investor sells an investment property in a 1031 exchange and wants to use those proceeds towards the acquisition of an owner-occupied property and operating business using SBA financing. Question, can a 1031 exchange and SBA financing actually work together?
Yeah, absolutely. And, I've done this several different times for my clients. So they will be selling one property and buying another property. And as you know, the prohibitions in a 1031 exchange are primarily related to residential property being occupied by the exchanger or the taxpayer. But when we pivot over to commercial, we actually don't have the same prohibitions. So let's talk about that scenario. They're selling, let's say, a multifamily where it's a dwelling, you have individuals living in it, and they're going to buy a building that, let's say, their business will occupy. That might not sound eligible, but it absolutely is. And the reason is because we have a business purpose. And because we have a business purpose, the IRS says that you can defer the capital gains on the down leg or the relinquished property and use those proceeds to purchase the up leg or the replacement property. So as you can tell, combining SBA financing with the 1031 exchange tax deferral program is very powerful. And the reason that we can do this is because, again, we have to just go back to the single taxpayer rule, right? So the taxpayer that is selling the multifamily property is buying the, let's just say it's an office condo. They're buying the office condo. And so in terms of lending, what we'll see is the structure is going to be, I'm going to use some technical terms here, but then I'll define them. So we have an OC or an OPC, and then we have an EPC. So the OC, again, very simple, is the operating company, right? So the operating company is going to occupy the building. The EPC is an eligible passive company, and the SBA says that when you own the property where your business operates from, you can obviously own your business, and if you do, then you can own the building through a separate entity. And in this scenario, that entity that owned the multifamily would just be the entity that also owns the owner-occupied building. So that's literally how simple it is.
If you're like many of my clients who've owned rental properties and apartment buildings for 5, 10, 15, 20 years, you're most likely tired. Maybe you're tired of the tenants. Maybe you're tired of the telephone calls, the toilets, the turnover, the terrible teas. And what you're looking for is maybe a little more time off, a little more travel, a little more tranquility. That's why we've created the new webinar, Mastering the Exit. Sell your rentals, defer your taxes, and reinvest into passive income streams. Spend 60 minutes with us as we cover going into a 1031 exchange and looking into more passive options. Maybe you're looking to reinvest into a net lease asset, or you're interested in a Delaware Statutory Trust or DST, Or maybe you have a favorite charity and you want to learn more about the Charitable Remainder Trust. Register for this free webinar. Learn more about what your options are so you can get away from the terrible T's and focus more on the terrific T's. Understood. So as long as they're able to structure where it's obvious that the single taxpayer who sold the down leg, the multifamily property, is the same individual or entity that's purchasing the up leg for the business, then they are capable of doing a 1031 exchange and exchanging that. Now on the SBA side, so that means that the SBA financing will accommodate a 1031 exchange because they're going to have to provide financing for it as well, correct? Because you have to exchange debt for debt, correct? Same amount of debt?
Absolutely. And, to them, it's incidental. It doesn't matter if the LLC is called Wally World LLC, multifamily. It could be the EPC or the eligible passive company. So it really doesn't matter what it's called. Typically, they're going to be an LLC, could be a corporation, but typically it's the passive real estate holding companies or LLCs.
Understood. Got it. Okay, so circling back on the use of a 1031 exchange in an SBA loan, let's say I'm buying a $2 million property and business. Part of the purchase price, of course, is the real estate, but part of it's going to be the equipment, the inventory, furniture, fixtures, goodwill, and other business assets. How do you determine really what portion or amount of it qualifies for the 1031 exchange and what portion does not?
So the 1031 exchange is going to be directly related to the property, so the real property. And unless you're improving the property, the FF&E that goes into the property will not affect the exchange or the use of proceeds. Now, if you're improving the property, that's called an improvement exchange, and that would include at that point in time putting proceeds essentially into the transaction, and then there would have to be an appraisal done, and that would be an improvement exchange. But if it's just personal property, FF&E, that would not impact the 1031 exchange at all.
Okay, so that's an interesting concept. So with a purchase using a 1031 exchange, there is an opportunity for you to say go into the property and maybe have to do a tenant improvement in order to accommodate your specific business needs. Is that what you're saying? That some of those funds from that 1031 exchange through the SBA could go into the improvement of the property, or does the SBA maybe give you a carve out for improving the property to accommodate your business?
Yeah, so typically, and remember, in the 1031 exchange, what we want to do is two primary things. The first thing is we want to replace the proceeds or up to the sale price, right, of the relinquished property. So that's the first thing. So if we sold it for $2 million, we want to buy a building that has a value of $2 million or more. And then we want to replace the debt. And so in this case, the SBA lender would be replacing the debt at a minimum. However, proceeds can be used from, like you said, a carve out from the lender to improve the property.
Interesting.
But proceeds from, so let's say they didn't, right? Let's say they didn't, and you were to use funds from the 1031 exchange to improve the property, and then there was a reappraisal. So let's say you bought a building for 1.8, right? And you had proceeds, though, that was able to improve the property. When you went to purchase it, the value might have been 1.8, but after you improve it, now the value goes up. So now you've replaced the value of the property that you sold, the down leg, with the new property, but you did that through an improvement exchange, not just a one-to-one relinquished property sale with a replacement property purchase. Now, obviously, there's technicalities with that. I would definitely, here in this case, consult your tax attorney, consult your CPA, but generally speaking, that is allowed in a 1031 exchange, and that's called an improvement exchange.
Interesting that as many 1031 exchanges as I've been a part of, I don't believe anybody's ever used the funds for improvement going into it. So that's certainly something to explore further. Yeah, and we do always recommend you speak to your CPA and your tax attorneys or whoever those professionals are. So along those lines, it's probably important then when you're drafting your purchase agreement or your APA, your asset purchase agreement for the move, for relocating your business, that you make sure that there is a purchase price allocation in that. I'm assuming that the SBA is going to require that. And like you said, are they going to require like a separate appraisal on the property portion of it also as part of that?
Yeah, so we call that an as completed appraisal. And so whenever you buy a property for X amount, but you plan to improve the property, the lender then is going to lend on what we call the as, so there's the as proposed value, which the reason why it's proposed is because the work hasn't been done yet. And so you say, okay, I'm going to buy XYZ property, and it's in this condition today, but I'm going to improve it with proceeds from the finance, from the loan, right, from the financing. So in that case, the lender says, okay, but here's what we need to do. We need to validate that the value goes up because the lender will lend based on the as proposed value, as completed value, right? And so when you engage in that type of loan, the bad news is that you have to engage the architect, you have to engage the contractor. There's a lot of work that goes into it because the appraiser is going to use all that information to give the as completed or again, as proposed value based on what the architect and the contractor say are going to be the improvements. Now, something to be very aware of, and I share this with all of my clients on the ThinkSBA side, is that don't think that $1 of construction funds equals $1 of value. And that's where people get into trouble, right? They think, oh, I'm putting $300,000 of improvements into the property, so that means if the building were purchased at 1.8, now my value at the end of it will be 2.1. And that is not the case. I definitely share that with my clients before they ever engage. And in fact, you don't even know, right, until the appraiser goes out there and says, okay, this is how much leverage, you might say, that I will give value to based on the improvements. So maybe it's 50 cents on the dollar. Maybe it's 30 cents on the dollar. So again, going in there and, let's say you're flying in Brazilian marble from a remote part of Brazil, and you think, oh my gosh, this is amazing, and it's going to absolutely improve the value of the property. The appraiser might get in there and be like, you know what? That works, but Brazilian marble doesn't really move the needle, right? So like, if you were to do a regular countertop as opposed to this, it doesn't really move the needle. So borrowers and exchangers have to be very cautious of thinking that there's a one-to-one correlation between improvement cost and improvement value.
Yeah, that makes a lot of sense. Okay, so let's bring in the SBA portion of it, since you you mentioned the SBA side. So in my 1031 exchange proceeds are going into the real estate, while an SBA 7 loan is refinancing financing the overall acquisition. How does the SBA lender look at those exchange funds? Are those looked at as equity from the borrower? In other words, can those exchange funds cover any down payment or injection of capital that the borrower has to make for the SBA side?
Absolutely, but again, has to be tied to real property. So if there's any goodwill portion, that would have to be separate, right? So we're talking particularly or specifically about real property. So especially for the 1031 exchange, you'd want to make sure that if you're buying property, that the funds going in from the down leg, right? So you sold your relinquished property, the down leg, you're going to take the proceeds and you're going to use that absolutely as your equity injection. And I always love that, right? Because in what I do on the ThinkSBA side, the biggest constraint on every deal, or the possibility on every deal, it's not cash flow. Typically the cash flow is fine. It's not experience, especially when you're buying a building. Like, you're the owner, you know what you're doing. It's the liquidity that needs to be deployed into the real estate. And so I can tell you, and I've done this several times, that when my borrower says, hey, I'm doing a 1031 exchange, I love it because I don't have to take any liquidity off of their balance sheet. So the liquidity is coming from the sale of the relinquished property, going into the purchase of the replacement property. Their cash balance on their balance sheet is going to stay where it is. And now all the tension's released. The banker loves it. I love it. Everybody really appreciates when a 1031 exchange is involved in the purchase of owner-user real property.
Okay, so what I hear you saying is when someone's considering doing an SBA loan, and it's going to be the asset purchase agreement plus real estate. So there's going to be a real estate purchase, there's going to be a business purchase, for instance. You're saying that the biggest challenge is for people to come up with the cash, not only for the business purchase, but for the real estate portion.
Yes.
So what's the minimum generally SBA kind of down payment if someone was buying a business?
So buying a business, the minimum's 10%. Now there's some, rules below the surface there, but we won't get into that. It's typically 10% when you're buying a business.
Okay, so 10% down. Now, flip side of that, does the SBA have a higher down payment requirement for the real estate purchase side?
No, in fact, if you're buying owner-user real estate, and this wouldn't work for a 1031 exchange, by the way, what I'm about to say, but in theory it works for someone buying a building. So typically, I'd say 90% of the time when someone buys a building, they're renting first, right? So they have a commercial lease. And then they say, hey, I want to buy. Okay, great. Well, the SBA calls that rent replacement. And what that means is you're replacing your rent or your lease with the purchase of the building. And because you're going from being a leasee or a leaseor or a renter to an owner, the SBA says, guess what? If the cash flow merits, there is zero equity injection required. It's called a rent replacement 7A. Now, if you were to exchange out of a relinquished property into buying an owner-user, you're going to have to inject the funds, right? You just have to do that. So you can't, if you take those out, obviously you're going to pay capital gains on that. So the rent replacement option is not going to be an option for exchangers. They have to replace the debt and replace the proceeds and go, again, purchase for purchase on the 1031 exchange.
Okay. It's two separate transactions, but the SBA lends as if it's one, or do they lend as if it's two separate transactions?
You mean like if they were buying business and real estate simultaneously?
Correct. Yeah.
Yeah. So in this case, with the exchange, if the exchange was in play, then you'd want to separate those out because you want to use the exchange proceeds to inject the capital into the real estate, and you'd want to buy the business separately. And so that means you'd have to come up with the 10% on the business side in order to buy the business. Now, if we don't have a 1031 exchange, then you can combine them. I do that all the time, in fact. So I'll combine a building purchase with a business purchase, and I'll put it on a 25-year amortization with a 3-year prepayment penalty, which gives the borrower all the flexibility to ride that out 25 years, both out. In fact, I'm doing that right now. This is a cool scenario. Your listeners will like this. So I helped a gentleman finance a business 2 years ago. The business is performing. Now he wants to buy a building, and he thought, you know what? I can only afford this much because I'm actually paying, right? So on the loan that I used to buy the business. And he came to me and I said, well, Sam, that's actually not true. He said, because I love this building, but I think it's a little bit out of my price range. I said, well, let's take a look. So I said, hey, Sam, you love the building. He said, I love the building. I love the neighborhood. It's in a commercial business park. He said, I love everything about it, but I don't think I can afford it. And I said, okay. I said, so here's how you can afford it. What you're going to do is very, I would say, complicated structure, but when you hear it, very simple. So this is what we're doing. This is real-time deal. He's under contract. We're going to the close. So I got him a rent replacement 7A building purchase, okay? It's going to be prime minus like 1, so it's going to be 5.75%. And what he's going to do is he's going to buy that building with 0% equity injection. 0. Again, he's not exchanging. 0%. Now, you're saying, okay, well, he's not even injecting capital into that. Is his payment going to be too high? Well, this is what we're going to do. This is genius. So the business acquisition loan has 0 prepayment penalty. And something that borrowers don't understand is that the SBA will re-amortize the loan, their business acquisition loans, immediately if you make a large principal payment. So he's not deploying any capital into the real estate purchase. But what he's going to do is he's going to take that down payment, 10%, which is about $400,000. He's buying a $4 million building. And he's going to pay down his business loan with $400,000, which is a higher interest rate, right? And what the SBA is going to do is they're going to say, oh, you owed $800,000 before you made that payment, but now you only owe $400,000. So they're going to re-amortize the $400,000 over the 8 years he has remaining. We lopped his payment in half instantly. And now he's able to afford both the business and the real estate purchase. And he was able to go a little bit bigger on the real estate purchase than he originally thought. So it's complicated, but here's the thing. If you know the rules, which I know the rules, and this is why you don't go to just any broker that throws these things up against the wall, right? Because if you go to any loan broker in the country, say, hey, do you do SBA loans? They'll be like, yeah, I do. But that's like asking me, do you make wood-fired pizza, Ryan? And the answer is yes. I have an Uni pizza oven. But if you put me up against Wolfgang Puck and you ask me, do you make wood-fired pizza? And he was there, I would say, no, I really don't do that. You know what I mean?
Sure.
And that's the difference between a loan broker that's out there that says, oh, I do SBA. Again, it's on the menu, but they're not experts, as opposed to someone who lives and breathes and does this every single day for a living.
Well, I totally agree. And that kind of leads into my next question. The SBA transactions that I've been involved in are extremely complicated compared to just purchasing a piece of real estate. Mm-hmm. When you start adding in the asset purchase agreement that could be 70 pages long, and all the details and all the inventory and all the FF&E, it's mind-boggling how detailed those transactions can become. For that reason, and so I totally agree with your point. Yeah, I'm sure your pizza's great, but I don't know if I would trust my multi-million-dollar appetite on it. I don't know if I would trust my multi-million-dollar life savings on it. So I certainly can. It's good for folks to stay in their lane. And me, I've always been in a specialized field, multifamily. So I totally agree with you. So where do these deals go wrong? They got a lot of moving pieces. You got a buyer, seller, lender, qualified intermediary. You got attorneys, escrows, and brokers. Okay, so if you're doing a 1031, does the 45, 180-day timeline still apply?
Yeah, absolutely. 1031 exchange does not change for the SBA. Even though one's an IRS rule and one's a federal government department, you have to work within the guidelines. So in this particular case, let's just say that, again, your replacement property qualifies to replace 100% of the gain, and the debt replaces 100% of the debt of the relinquished property. That property was identified within the 45-day structure, and then we go to close. And again, what's really nice is that in this scenario, again, if you have the property, right, the property, then you're going to ID within the 45 days, no problem, and you're going to close within the 180 days. Real estate's a lot different than business acquisition when it comes to timelines, and the reason is because real estate is so much easier to evaluate and to do due diligence on, right? So how do you do due diligence on a property? I mean, you walk through it, you hire experts who understand how to assess the bones of the property, right? And that's it. And I mean, all that can happen within like 2 weeks. Someone walks the property, they're an expert, whether they're a plumber, electrical, foundation, all those things, right, that are material to the building. That's easy. Valuation of a building and appraisal, easy. Well, what about a business? What about, and I'm telling you, most of the deals that I work on are what we call company prepared financial statements. And so the difference between real property and financial statements is that real property is tangible. We could see it, we could touch it, we can walk it. When you're looking at a profit and loss statement prepared by some guy who lives out of his checking account and doesn't even know the general accepted principles of accounting, how do you do due diligence on that? How do you even know if we're going to compare it to real estate? How do you know they use the proper materials, right? How do you know that they followed the code? You don't have any clue. And so what's nice about real property is that when we're going to be trying to follow the exchange timelines, the 45 days easy, the 180 days is easy.
Okay, so the foundational guidelines still apply for the 1031 exchange. The twist
Absolutely.
here is, I guess my investor-focused brain is getting hung up on the owner-occupied aspect of the SBA financing using real estate. So, okay, so an owner is running his business out of a leased property, and he owns a couple of fourplexes. He says, "Do you know what, Ryan? What I want to do is I've spoke to the owner of this property I'm leasing, where I'm running my business, and I want to purchase the property from him. We've decided that on a price. We've decided that that it's time for me to purchase." So he can turn around and he can list and sell his couple of fourplexes, and then identify the property he's staying in his current business, and then just can he do a property only purchase using an SBA loan?
Absolutely. Yeah, no improvement. And here's the beautiful thing about this, Doug. Let me ask you, and I don't know, maybe this is different for some people, but would you rather be your own tenant, or would you rather have someone else be your tenant? Are you cleaner? Are you taking care of the property? Are you making sure that the outside is maintained? So in this particular scenario, let's say you have 2 fourplexes. That means at minimum you have 8 tenants. The faucets leak. What else happens in these things? The electrical goes out.
Tenants, toilets, trash, termites, telephone calls,
Right.
terrible teas. Come on, Ryan. I've been
Right.
preaching this for 10 years.
There you go. So now imagine you take those two fourplex, multi-unit buildings. You sell those. You put them with I-1031 accommodator. That's my company. We keep those funds in a segregated account, nice and safe. And then you go buy a building where you're going to move your company, your property management company into, and now you deploy those funds, you wire those out through escrow, you buy this building, and now instead of having 8 tenants with the terrible T's, you are, through your business, your entity, you are now your own tenant, technically. But here's the caveat, and this is why it's eligible for the 1031 exchange. It's a business purpose. It's not a consumer purpose. And that is the biggest difference. So in this scenario, let's say I was going to exchange out of those 2 fourplexes or multifamily fourplexes into a beautiful beachside residential dwelling in Hawaii. And you go to the IRS, you fill everything out, and they're like, "Come on, man, you can't do that." You're like, "Why can't I do that?" Well, it's very explicit. You can't do that. Well, then why can you do it if it's a business? Well, because it's for a business purpose. And technically, even though you're the beneficial owner of the eligible passive company, there is a separate entity. And you're the beneficial owner of both. You're the beneficial owner of the operating company, which is the OC, and you're the beneficial owner of the EPC, which is the eligible passive company. Even though you're the beneficial owner of both of those, and our mind says, well, that can't be eligible. It is, and the reason it is because these are for business purposes. You own the business, obviously for commercial purpose. You own the building for a commercial purpose. And technically, there is a separation, and unless you're Elon Musk, which I've heard him say this, you're not living in your owner-occupied building. Elon does it. I wouldn't do it. I don't think most people do it. Although there was a client in Carlsbad, and he did it, and it was a beautiful setup.
Fascinating. Just I think I'm having a challenge grasping all this just because for me, it's just sell a building, 1031 exchange, buy another investment building, a building for investment purposes, like kind. It has to be purchased as an investment. So,
Yep. And it is.
maybe it's a good time to pivot. So you've recently started your own 1031 exchange accommodator company. I know you had reached out to me to talk about that. And what brought you to the point where you thought, man, I just need to, because before this conversation, I really thought, why is Ryan starting a 1031 exchange accommodation company? I mean, he's the XBA expert. How does it tie in? Now, of course, the lights have gone on. So tell me, why did you decide that you needed to start your own accommodation? And so what's the plan going forward with that?
Yeah. So why did I start this? So I had lunch with a mutual friend, Andrew. This would have been in early 2025. And
Andrew Cavagora?
Yes, Andrew, yes.
Okay.
So I had lunch with him. So I'm going to give a little plug for Andrew. Andrew is the man, by the way. I've known him since he was in high school. And when he was in high school, he was such a hustler. He literally flipped cars to earn income while he was in high school. I was still using my dad's credit card when I was like 23. This kid was supporting himself and his family when he was in high school. So I will digress. But we were having lunch, and I was learning about his business that I literally saw him go from high school to Miracosta. He went to a 4-year university in the Bay Area, came back down, worked for a multifamily broker, and then landed himself in the DST industry. So we're talking about that, and I was just like, you know what? So 8 years ago, I sold an investment property. So I originally bought the property for my primary dwelling. Like a lot of people do, I moved out. I was now in another dwelling, and I rented this piece of property out, and it was rented for several years. And so I was like, you know what? I'm going to do a 1031 exchange. So I contacted one of the best in the country. I mean, like absolute one of the best accommodators in the country. And what they did is they onboarded me. They received my proceeds, and then I didn't hear from them. Could I have called them? Probably. But here's what I was wondering. So this is big black box, right? It was the first time I ever exchanged. So what I'm doing here during this time is I'm thinking, I think I have like 45 days or something. That's as much as it had been explained to me. And so I'm literally going to my escrow documents. When did I close? When did the 45 days start? And I'm very quickly getting stressed out because I don't really know what's going on. And so after that lunch with Andrew, I thought, you know what? Let me see if the 1031 exchange industry is still in a similar place, right? So I do some Google search, and I'm like, I can't find that there's an end-to-end SaaS platform, digital platform, where exchangers can do what we've been doing for how long? 20 years? Logging into, we've been logging into our banking platforms for how long? For like 20 years, right? So I went out and I saw that there wasn't anything like that. So I said, you know what? I'm going to build it. And you say, Ryan, what qualifies you to, you're a banker, man. You crunch the numbers, right? What qualifies you to build that? So what a lot of people don't know, and I'm going to bring this full circle. So when I got out of playing baseball, I started a company called Get a Hit Digital Marketing. So I have been designing websites since 1998. And I was doing it for a little while professionally, but then I moved into financial services, and I kept it as a hobby. So graphical user interface design is something that I have been honing now for several years. But I didn't design the I-1031 Intelligent Exchange platform. What I did was I immediately hired a friend of mine, Michael Trezza, who's the owner-operator of Lithium. And Lithium's on the cutting edge of AI and SaaS development. And Michael's an amazing partner, and he has created, I'm going to have to give him the credit for the graphical user interface. So I take the credit for the workflow. He takes the credit for how it looks. So what we did was we combined our expertise, and of course I paid him. And from the middle of 2025 until, actually we're still in development. We added some cool features today that I think the exchangers will love. But we created this platform so that from the very beginning, anyone right now can go to i1031.com, click Start Exchange, and they create a username and password in seconds, and they're in their digital dashboard. It's that easy. I had a client come to me, referred, and he did this over the weekend. And it's amazing to see now that exchangers have the power of a digital platform on their desktop. And here's the cool thing, it looks even better, it performs even better on your phone. So we have what I call an exchange in your pocket, so that now exchangers have all the power. And what's great about the platform is it's not a DIY, by the way. It's not a do-it-yourself. Just because you can log in, open the exchange, but we're there with you the entire time. In fact, we're doing 80% of what's required, and the exchanger is doing 20%. But the workflows are there, so that the relinquished property workflow and then the replacement property workflow. But here's really where this platform shines the most, is that we have embedded all of the 1031 IRC rules into the platform. So let me give you a really simple example of what this means. So under our platform, the exchanger gets to identify the properties. So the way it works, if you're not using our platform, is you're either going to go in your email, pull up a PDF document, fill it out, and sign it, right? That's the way. Or you're going to print it, complete it, sign it, and scan it, or you're actually going to use the U.S. Postal Service. So those are your three choices. You either fill it all out digitally and do a digital sign, or you print it, complete it, scan it, and then email it, which is unsecure, or you actually fill it out after you print it and go to the U.S. Postal Service. So those are your three options. With the I-1031 Intelligent Exchange platform, all you do is go to your desktop or your mobile phone. You click the button that says Add Replacement Property. You put in all of the detail specifics, and your property is identified. It's absolutely amazing. It cuts out all of the red tape. It means that you can literally do this, and this was always my vision. You can do this from a ski lift, especially if you have Starlink. You can do this from a ski lift on your mobile phone before you hit the slopes. So your handsome, intelligent, multifamily broker, Doug Tabor, calls you while you're on the ski lift in Aspen, and he says, don't stress out. I know we only have 2 days to identify, but I have found the perfect property for you. And instead of saying, gosh, I'm in the mountains, I've got to ski down this mountain, and then I'll, ruin the rest of my day so that I can fill all this stuff out. No. Boom. You do it right there from your iPhone or from your Android. You get it identified. In the dashboard, it'll show you it has been properly identified according to IRC 1031 rules. So, IRS or IRC, IRS revenue code. And then you can enjoy going down the mountain knowing that you have completed the replacement property identification properly and with plenty of time. So that's what we have brought to the 1031 exchange world. And let me tell you the feedback I've gotten. There's a lot of trepidation. That's what I've received. And I understand it's new to the 1031 exchange world. But here's the thing. Nothing that is in this application is new to the world. What do I mean by that? People have been logging into their banking platforms now for 20 years. They've been sending wires for 20 years. They've been sending ACHs for 20 years. We've been doing transfers between our bank accounts. We've been logging into our 401ks. We've been logging into our IRAs. So we have been logging into digital dashboards now. We've been buying marketable securities. We've been buying private securities. So we have been doing this as a world for years. But because the 1031 exchange world is comprised mostly of individuals who are older, and the accommodators are mostly older, because in order to amass a real estate portfolio, that takes time, right? There aren't a lot of 21-year-olds who are sitting on these huge real estate portfolios. So because of that, there wasn't a lot of innovation. So I said, you know what? I'm going to do it. I'm going to innovate it. And here's what I'm going to combine. I'm going to combine my banking experience. So I was a treasury management specialist, which means I understand constructive receipt of funds. I understand dual and triple custody of funds. So when you work with I-1031, we are extremely careful on how we move your funds, and it's actually embedded in the platform. So you can see who's actually sending the wire, when was the callback completed, all of that stuff is in there. So not only my banking background, but I've been a real estate broker now since 2019. So when I jumped out to be a loan broker, I obtained my real estate broker license. So I have been involved in hundreds of escrows. I've reviewed hundreds of title reports. I understand title investing. And see, that's how the banking part has overlapped with the 1031 exchange part. And so you put that all together, and now what I tell people is, I would say most accommodators come from the real estate world only, without the banking background. But that's where the fraud happens, right? It happens on the banking side. And so I'm bringing my banking side, my real estate side, and I'm bringing that all to bear with, again, a first-to-market digital platform that works amazing. And the last thing I'll say about it is, what I didn't want to do is say, hey, you guys have been used to the horse-drawn carriage, let me put you in a Tesla. You know, it's like 200 years, right? Or maybe like 150 years worth of innovation.
Yeah, over 100 years, yep.
I didn't want to do that. So what our application does from start to finish, so again, you could start your exchange online, complete the exchange agreement, all the way to the end. It all mirrors the analog process. So the same thing, you give us all your information, we require certain documents, we obtain those. We actually complete the most critical part of the agreement, just like you would in an analog situation. We make sure your title investing is proper. We make sure that the single taxpayer rule is proper, so that's through the EIN or Social Security number. So you have proper title investing, you have the proper Social Security number, EIN, so boom, now you're tight. Now you just type in the incidentals, right? What's your home address? What's your mailing address? And then the exchange is open, the dashboard's there, we receive the funds, you see your 45 and 180-day countdown timer playing right in front of you. You identify the replacement properties, again, with ease, and then that whole process, we're there. We're connecting with escrow, we're connecting with title. You could put your people who are related to the transaction, all of their contact cards are in your exchange. So we're not wondering, and I've had people tell me, you know, like, yeah, I'm always looking for, you know, like the broker's contact info. I've got to go back to the email, right? No, you don't anymore. It's right there in your exchange. Oh, and we have a beautiful and elegant messaging component so that now everybody, the exchanger, the banker, the escrow, everybody, because we actually have a trusted advisor login. Trusted advisors like you can log in, see the whole exchange. You can't change anything, but you can message. So we can consolidate all of the messaging. And then the last thing I'll say about it is that at the end, this is amazing, at the end, you click export, and every keystroke was captured for an IRS-ready audit report. One click of a button. If the IRS ever audits you, boom, export, and then we do have a partnership with ShareFile. So all your documents through the portal are uploaded into your private and secure ShareFile folder. And that is it. And I'm excited about it.
Yeah, I can tell. I can see that you're excited. It sounds exciting. Certainly, congratulations on getting it off the ground. You know, it's probably going to be slow to go, but you're a man of determination. I mean, former professional baseball player. I met you as a banker and watched your career growth as the SBA expert, now moving into 1031s. Wonderful father, of course, Christian brother.
Yes, sir.
We're going to put all your links down below, but where else can folks find you if they're interested in learning more about all the things that you're participating in?
Yeah, you know, I would just go to LinkedIn, Ryan Smith, again, owner of ThinkSBA and I-1031 LLC. It's pretty easy to find me. And just on that note, Doug, you're right. It was a little bit challenging. Obviously, you know, a brand new digital platform. I have brought in an individual that, you know, we are partnering with one another. And last week, this was the coolest part. So last week, we brought on 4 new clients. So we have 4 new exchanges that are currently active. And not once did they ask me, Ryan, how do I do this or what do I do? They simply signed the agreement. They started using the messaging. They've given us all of the information we requested. and no one has asked us, how do I do this? It's been pretty cool.
Yeah, that sounds cool. Well, Ryan, congrats on that. And thanks for your time today, and look forward to learning more. Maybe we'll have you back down the road and we can talk about how things are going with the 1031, and you can give us some more information on how we can utilize the SBA loan and the 1031 exchange for successful business transactions. So thanks, Ryan. I appreciate it, my friend.
Thank you, Doug. Have a great day, and thanks for having me on.